Welcome everyone. I just wanted to give you a presentation on a quick video of some new signals and trade setups that we've generated using the Person Algo Optimizer. If you could, just for a quick second, go through this risk disclosure statement if you would. Remember, trading involves a risk of loss. All right, excellent. All right, let's take a look at the new setups and signals and triggers in the market condition that we're looking at here in the S&P 500. What you see in front of you is a 60-minute chart on the spiders. Now, as you can see, it's been a nice little run to the upside, but it's been also a choppy downside move. Blue lines suggest, as you can see here, winning trades. A red line is a losing trade. This is the overall equity curve, and we did have in this period here during option expiration kind of a choppy transition where we got a little bit of a profitable drawdown or a give back of peak profits, so to speak. Let's take a look at the overall performance as far as wins, losses, etc., etc. This again is a 60-minute model, and as you can see, the longs do a lot better than the shorts. Why? We're in a bull market. So let's take a look. 2.83 is a profit factor that's not bad. It's 62% of the trades are winners, which means every 6 out of 10 trades wins, and almost the winners outpace the losers almost 3-1. So as you know, that's not a bad automated trading system, and we can always do better. I'll show you how in just a second. But this is an automated system that gives us a general idea what the potential profit is, and it also has a trailing stop function, which we'll uncover. What is that going to do for us for determining trades and the objective of where those trades can go? A lot, actually. If you take a gander down here, you'll notice that the average net profit, the average winning trade, though, is around $600. Now, we're going to take a look at that number, $600. And the first thing that we have to understand is that what is the base account size that we're starting with? And this is set at $100,000. It's trading off of a 100,000 notional account in the spiders. That's what I wanted to review with you guys. Now, moving forward, here's what I wanted to share with you guys so that we all have a better comprehension of an automated system. First, I just mentioned that if it generates a buy signal, it might have a profit target way up here, but it's going to sell because it trailed a stop. And as you can see, everything's going fine. It rallies up and then boom, it stops out the winning trade. And then it reversed, went short with a small loser. It went back, and on a trailing stop function, unfortunately, it got out and missed more profits. So it's not perfect, but what it does is it gives us on average, and you can see now that we're in a choppy mood environment, here's where we did have a trailing stop. Thank God it did enact, because again, while you'd say, well, I wish it didn't trail the stop too tight there, and over here you're like, well, I'm glad it trailed the stop, right? Because it would have turned it into a nightmare, a bigger loss. How can we make this better? Well, perhaps, I mean, if we could actually predict, like for example, that the market on this buy signal, if we could predict that that was going to be the exact high, that'd be great. What it did is it said, I'm going to trail the stop, and if it has one of these white lines, it's a last conditional change, it stops out. In fact, it reversed and went short. You could see here it was long and then goes short. Same condition here. At the end of today, and that's what I wanted to share with you, gang. At the end of today, it generated a buy setup, and it went long. So currently, it is long, 368 shares, and this system does not trail out. It gets out of everything. Here, long 368, it's out of everything. And you'll see here, long 358. It bounces around between, here's 360. So it automatically shaves off or adds or deletes the amount of shares that the price action will allow up to $100,000 of equity. So it figures out your position size automatically. Here's the thing I think it's the important takeaway. It's long, and it would generate possibly about a $600 profit. And that's kind of interesting because here's what it would need to get about a $600 profit on average, right? It would need, according to these swings, it would need to get back near this old shelf of what was support and then turned into resistance. So the question begs, it's long. It will more than likely trail the stop because this model does not get out at the intended profit target. How do I know? Well, if we go over again to the actually, I'll just go and share this with you. We'll go to format. You can see that we're using this model 16. And let's go over here, and I'm going to do something interesting and share with you this function, scale out ratio. Now I'm going to hit optimize real quick, and it's optimize values between 0 and 1 with a jump rate of 10%. I'll go through that right now with you. What does that mean? While this optimizes in front of us, what it means is that does it get out at the profit target, or does it trail, or does it scale out on a 10% increment? If we're in 300 shares and it says, well, you know, it'd be best to scale out at 10% or 50% or 80%, what's the best profitability over the last 52 weeks? Now, on a 60-minute chart, you're talking a lot of trades. So, and you're talking a good sampling of all types of market conditions on a 60-minute basis. You're talking up, down, kind of choppy, non-trending. You got everything involved in this market environment. And so let's go and take a look at the optimization report. And here's where it shows that it does not get out of the market at its intended profit target. Rather, it trails a stop. This function here and everything in between, it'll show with you what it's whether it's 10 to 1 or the other, whether you're trailing out 10% of your size, 20%, 30%, 50%, 60, 70, 80, 90, or if you're getting out of everything. And I'm going to just hit this apply test to chart, and you can see our profitability went down about $3,000. Our trade is about the same. All total trades is 168 total trades in the last year, both long and short. So what does it do? Basically, it's not, the market is not generating on a 60-minute basis in this environment, at least in the last month. It's not generating a huge amount of longevity of really smooth trending market conditions, very choppy. So that's what this first shows us. Second off, if the market is getting ready for maybe another week or two of consolidation or correction in the market, if this perhaps last leg that we saw was indeed a top, the market goes down. If the market rallies a little bit, maybe we come up to where I just pointed out, that $600 max profit. Maybe we go a little bit more. We'll have to take a look as we head into the 4th of July, Wednesday. Thursday, we have the Beige Book. Friday, we have the monthly unemployment report. And then we've got earnings. The peak of earnings start around July 18th. So we're going to have a lot to digest in the next coming days with a holiday and, of course, major economic reports and then earnings season all over again. But on this particular trade, are we interested? Is this signal the signal that's going to generate the grand behemoth trade for the entire year? No, but I think what we are going to look at is if we take a look at overall positions, and this is what I wanted to really focus in on as well. Two things. What is the overall market action look like? It currently generated a new fresh long position, but let's take a look at the overall S&Ps with a couple other indicators behind it. So first and foremost, we're going to look at the volume and the momentum indicator, and for that we need to format the analysis technique. Let's get on balance volume, and let's take a go to status. Format. Go to scaling, and let's automatic scale that. Hit OK. Close. All right. Now here's a scenario that we have based on a weekly chart using the spiders. We did generate a person's pivot study, or otherwise known as a PPS sell signal. This indicator, momentum indicator, it paints an arrow over the chart, can be found on Thinkorswim's platform. It could be found on Trade Navigator Genesis platform. I'm just sharing with you the combination of my work with my TradeStation proprietary indicators, namely this volume indicator right here. And we do have quite the negative reading of volume on a week-to-week basis. Besides, we did generate a bearish divergence pattern as the market was starting to go up with momentum behind the market. So what this really signifies is we're going to come up to, interestingly enough, a little gray line in the sand, which would be near that $600 mark that the short-term signal or trading strategy was suggesting that the market may see a bounce and its average profit of around $600. What a coincidence would be right up into the pocket of these weekly moving averages. What do we do from there? That's another question. If you could tell me how the market's going to close the week out on high volume, low volume, on a rally, or sell back down, that would be very helpful. So let's take a look. I think for that, we kind of will go back and look at the daily analysis real quick and say, all right, well, if we get the market back up into this zone of resistance, so we've got a 60-minute system that suggests that $600 is the max profit target that we generally have been seeing, and that would be up there around that 273. We've got a daily resistance number up there, and we have weekly moving averages up there. So moral of the story, what I'm walking away with, gang, is that we want to see how the market responds to that resistance. If it goes up and respects that resistance and starts to sell back down, then this would give me the indication that this is nothing more than potentially kind of like a bearish flag formation, and that the market could see further price erosion over the next 2 weeks as we prepare for earnings. So right now it's long, and if we generate a market rally, if the volume doesn't kick into high gear, if we don't see the market press through this resistance, 273.62, I believe that we're going to just see more of this and be watchful for a break below the swing low right there. Because if we do, then this would suggest an A, B, potential C, and then D wave is right back down to that zone, which will probably present a better buying opportunity as we head into earnings. That's what I've got for you guys in this video, looking at the S&Ps, the spiders moving forward. And as far as other indices, look at the Qs, the NASDAQ 100. We generated my proprietary low close doji that seems to be gaining traction. People are calling it a doji sell signal. We actually published this in several books about 2 decades ago, and the last book that came out was in 2005, I believe, Candlesticks and Pivot Point Trading Triggers. Many of you are familiar with that work. Really set the stage for defining momentum signals in candles, as far as this was not an evening star pattern, but it comes with it a defined set of rules, which we've always encouraged people to review on our website. And so I would encourage you to download that article about the low close doji and high close doji with a set of rules behind it. So with that said, what we want to see is consecutive series of lower high, lower low, and then it would give us a measuring objective, ironically, which would put the market back down to about the 161. So if this turns out to be a false sell signal, and it would be a false sell signal if we completely negate. In other words, if you get 1 week of sell signal followed by the next week market rises right back up in your face. Like, here's a sell signal and right back up. That's not good. We're looking for, here's a sell signal and then right back up. We're looking for a market to move down and continue to see some follow through. What makes me feel that this could be the real McCoy of further weakness, at least down to 160, we had bearish divergence using volume. My volume indicator had lower high readings than the prior rally, and the momentum shifted negative. As you can see on the histogram, this is a proprietary momentum indicator, turned negative. So we might just see, and this could be what we're experiencing right now, a little sector rotation, unwinding of people maybe unloading some positions in NASDAQ and maybe going into other positions, safer. We see TLT bond prices on the rise, TLT, for example. Bond prices on the rise with a huge W pattern formation. Here's the W pattern formation. So if we take out the high, these gray lines, which are big time resistance levels, 122.52, closes greater than that on a rise in volume, which we do have already. If volume precedes price and the price does start to break out, it signals a move back to maybe 126 in bonds. On the other side of the coin, be watchful of, just to be at least rather than be one-sided, we are going up against resistance. If it holds and the market fails and closes back down underneath last week's low, baby, we're more than likely just in a little box trading range. So, but volume here gives us the edge that handicaps that bonds could see some further gains to the upside. And the relative strength tool, the person's market catcher, also is highlighting that the performance, that bonds are outperforming the rest of the market. So we're going to do an update here and a backup. I just wanted to go through what the overall market's looking like as we head into the 4th of July holiday and as we prepare for earnings season. It looks like we are looking at a lot of different markets under pressure. When I say a lot of markets under pressure, let's take a look at the radar screen, and I just want to collate all of the sectors between the Dow, aerospace, defense, all the way down. Look at all these sector ETFs that are in not just the red, but in bona fide fresh new weekly sell signals. There's a lot of fresh sell signal, and when we look at the weekly trend, really there's only a few sectors that are strong, mainly biotech, real estate investment trust, which is recovered, bonds, the TLT I just covered with you, naturally USO and UNG, USO particularly as crude oil's had a heck of a run. XBI is just a biotech ETF. Staples saw a big recovery recently. Utilities, healthcare, consumer discretionary, XOP, oil and gas exploration, and XRT. Those are your big stock sectors that have been still in a buy and are still seeing an uptrend in the market. Coincidentally, watch this. All of these are in bullish person's pivot mode right now. And pretty much if we go over and take a look at everything here, it's blue. What does that mean? From all the way down from the XSW, all the way down, this whole sector, not as the trend bullish as far as person's pivot, but the relative strength is positive against the market with one exception, the UNG ETF, and that is red. That signifies that the relative strength versus the overall market has weakened, and there it is, man. It's just a sick little puppy. Stay away from Uncle Natural Gas, or UNG. Just it doesn't have any real trend direction. It doesn't really move right now, and there's just no momentum behind it. So except for maybe a little negativity. So it's not going to provide a great short here because it's been in this little sideways range against another sideways range. So I'm not expecting a huge move up or down right now. That's it. That's how we're looking at a top-down approach to the market. What's strong? What's weak? You stick with the winners. The stronger sectors should continue to outperform, and the weaker sectors, all in red, are seeing negative relative strength. So anything that's red is pretty much not really all that good against the S&Ps, the relative strength. I hope you enjoyed this little quick video on what we look at in the markets. And again, we can do this for individual sectors. We can run it all the way down to sectors and go to and look for the strongest stocks with relative strength ranking against buy signals in the marketplace, which, by the way, I'd like to point out two stocks that generated fresh monthly buy signals. I think I tweeted out Coca-Cola the other day. Also Pepsi, big Pepsi with snack food Frito-Lays behind them. Pepsi had a huge high close doji, we call that, on a monthly basis. And then Coca-Cola, if we can get that into the mix for you real quick before we run out of time, and I'll just type it in. KO is the symbol. Another high close doji. I think it's got a pretty snazzy improvement of the accumulation of volume. It's getting less negative. Had a nice price reversal off of those weekly, monthly dojis. Let's take a look here at what the weekly pattern looks like. The relative strength is improving. And what I do see here is we had lower prices here and the relative strength made higher readings. That's bullish convergence. So the relative strength is starting to really improve against the overall market. So that's where we might see money move out of technology and maybe into some of these things such as a Coke trade, and watch for Coca-Cola to possibly, if it breaks out of this level of 44, we're up to 48, possibly, what is that, almost a 10% move in the next few weeks. Thanks again, and we'll update another weekly video as we see new opportunities present themselves with our signals and auto system. Thanks, everybody.